Hi, this is Indraneel and you are watching Business Bytes in our channel The Spotlight, India's first online business news channel. In today's Business Bytes, first news we have South Korean major Samsung smartphones exports dropped by 20% as they are no longer eligible for benefits under the PLI scheme. Second news we have Abu Dhabi sovereign investor ADQ to buy a minority stake in Blackstone-backed Aadhar Housing Finance. Third news we have JSW Group has set up a dedicated automotive vertical JSW Motors to disrupt EV market in India. Fourth news we have EV scooter maker Ather Energy significantly narrowed sales gap with Ola Electric with 16.5% market share in July this year. And fifth news we have Lenskart secured shareholders' approval to raise 2,500 crore through IPO while Mamaearth is looking to expand into newer product categories. In first news, South Korean major Samsung smartphones exports dropped by 20% as they are no longer eligible for benefits under the PLI scheme. Samsung's export of smartphones heavily dropped by almost a fifth year-on-year in the first quarter of financial year 2026, likely because the company is no longer eligible for benefits under the Smartphone Production Linked Incentive Scheme since April this year, when it is anticipated that without the PLI incentives, Samsung may have lost export competitiveness and thus recalibrated its export plans. And this same thing could happen with Apple and Dixon Technologies, who are two other major beneficiaries of this scheme after March 2026. In India, the combined effect of all these three companies who have been the flag bearers of the PLI scheme and local manufacturing and exports has the potential to derail India's bid to become a smartphone manufacturing hub for global markets, where Samsung exported smartphones worth about $950 million in the June quarter, which is down from $1.17 billion a year earlier and $1.2 billion in January to March. Without the smartphone PLI, India suffers a manufacturing cost differential or a disability of 10% compared with Vietnam and 15% with China, when even with PLI benefits of 4 to 6%, there was some disability, but still, brands and manufacturers were diversifying production and increasing exports from India considering the geopolitical situation. The industry has been sounding out the government for an extension of the smartphone PLI scheme beyond financial year 2026 to sustain the momentum of growing exports, which zoomed to $24.1 billion in financial year 2025 from just $200 billion in financial year 2018. During the PLI years, Samsung increased smartphone exports from India to $4.4 billion in financial year 2025 from $1.2 billion in financial year 2021, and the company is seeking incentives under the scheme in the current fiscal in lieu of the second year when it did not get them as it failed to meet the targets. In second news, Abu Dhabi sovereign investor ADQ to buy a minority stake in Blackstone-backed Aadhar Housing Finance. An investment vehicle backed by Abu Dhabi sovereign investor ADQ and partly owned by Sheikh Tahnoon bin Zayed Al Nahyan, who is the United Arab Emirates National Security Advisor as well as ADQ chair, is in advanced discussions to buy a minority stake in Blackstone-backed Aadhar Housing Finance, where the $200 to $225 million investment, which is approximately 1,750 to 2,000 crore, will be made through the secondary sale of shares. Aadhar Housing Finance is having a market value of 21,469 crore, when in the past month it has appreciated 12.11% in anticipation of a transaction, while year to date it is up by 18.60% on the back of a robust performance when the company reported a 19% increase in net profit to 237 crore in the first quarter ended in June. After the IPO, even though several strategic financial groups or funds approached Blackstone to either partially or fully exit Aadhar Housing Finance, where a transaction could not be concluded due to valuation mismatches. The company made a public disclosure that Blackstone funds have made an open offer to buy 113.5 million other shares, translating to a 25.82% stake from public shareholders as per regulations at 469.97 apiece. The open offer was triggered as Blackstone is flipping a majority shares, which is about 64% of its shareholding, from one set of funds to two new funds of the firm at 425 apiece to ensure continuity. The value of this secondary transaction is 12,000 crore, which is about 1.4 billion US dollar. If the open offer is fully subscribed, Blackstone will pay a further 5,335 crore in cash, where Blackstone may have to sell some stock to comply with the ceiling of 75% non-public shareholding. In third news, JSW Group has set up a dedicated automotive vertical, JSW Motors, to disrupt EV market in India. Sajjan Jindal-led JSW Group, with diversified businesses spanning across steel, energy infrastructure, cement, paints, defense and B2B e-commerce, has of late been eyeing the lucrative but highly competitive domestic automotive market, has set up a dedicated automotive vertical, JSW Motors, when they debuted in the automobile business in March 2024 by forming a joint venture with MG Motor India, owned by the China-based parent company SAIC, and this new automotive vertical will be an umbrella platform under which the group will launch passenger cars focused on new energy vehicles at an investment of up to 3 billion US dollar over the next 5 years, with launches set to begin in the second half of financial year 2026, when this will be separate from the group's joint venture with China's SAIC, JSW MG Motor India. JSW Motors is in talks with 3-4 companies across Italy, Germany, South Korea and China for collaborations to design and develop these cars, which will be sold under the JSW brand, when all vehicles will be made in India, with the earmarked resources deployed for commissioning the manufacturing facility, research and development. JSW Motors is aiming to disrupt the domestic electric vehicle market by manufacturing world-class automotive products in the country by leveraging the best technologies from across the globe, including Italy, Germany, South Korea and China, and combining that with India's own strength in robust supply chain and digital integration. The company is aiming to push new energy vehicle penetration to 50%, offering affordable, world-class electric, hybrid and plug-in hybrid vehicles, where China is at the forefront of EV and hybrid vehicle innovation and has become an integral part of the global automotive supply chain. As the world rapidly shifts towards sustainable mobility, technologies such as plug-in hybrid electric vehicle pioneered by Chinese automakers are redefining the industry landscape, when by combining the best global technologies with India's own strengths, JSW Motors intend to bring high-quality, technologically advanced, energy-efficient and environmentally responsible vehicles. In fourth news, EV scooter maker Ather Energy significantly narrowed sales gap with Ola Electric, with 16.5% market share in July this year. Ola Electric's shift from chasing growth to focusing on profitability has come at a cost, where, as per Vahan data, its market share in the electric two-wheeler segment slipped to 17.2% in July, which is down from 19.9% in June, while Ather Energy has sold 13,187 units for a 16.5% share, and the gap of just 526 units between Ola Electric and Ather Energy in July so far marks a sharp narrowing compared with June, when Ola Electric has sold over 5,000 units more than Ather Energy. Ola Electric reported a net loss of 428 crore on revenue of 828 crore for the first quarter of financial year 2026, and the losses widened 23% from 347 crore in the same quarter last year, but shrank 51% from 870 crore in the January to March period, when the revenue rose 35% sequentially from 611 crore but was down 49.6% year-on-year. The recent growth in Ather Energy's numbers was on account of the launch of its family-oriented scooter series Rista, which has expanded its user base across new segments and geographies. This development in market positions comes amid rising concerns over China's curbs on rare earth magnet exports, which are starting to hit electric two-wheeler sales in India, when the segment has seen a 21.6% drop in volume so far in July versus June. Even legacy players like TVS Motor and Bajaj Auto, which led the category, have seen sharp month-on-month declines of 31% and 27.4% respectively, and that drop in Ola Electric's market share and sales has come at a time when they are struggling with a range of challenges, including scrutiny over sales data discrepancies, vehicle quality concerns, and missing trade certificates at several of its retail outlets. And in fifth news, Lenskart secured shareholders' approval to raise 2,500 crore through IPO, while Mamaearth is looking to expand into newer product categories. Shareholders of omnichannel eyewear brand Lenskart have approved its initial public offering, that is IPO plans, according to regulatory filings sourced from the Registrar of Companies when in their annual general meeting, Lenskart shareholders cleared the proposal to raise 2,150 crore, which is around $250 million through the IPO, where the total issue size is likely to be as much as $1 billion. The company is set to file their draft red herring prospectus with the Securities and Exchange Board of India, that is SEBI, in the coming days, where filings also showed that Lenskart shareholders including SoftBank, Kedara Capital, Abu Dhabi Investment Authority, Fidelity and Temasek have approved a new employee stock option plan as ESOP 2025, which is comprising with 7.2 million shares. On the other side, Honasa Consumer, which owns beauty brands Mamaearth and BBlunt, is looking to expand into newer product categories like laser mask, face massagers, facial rollers, and LED light therapy devices, which comes at a time when sales of Honasa's flagship Mamaearth brand have slowed, and that prompting the company to recalibrate its focus. Honasa's brands, including Mamaearth, the Derma Company, Dr. Shades, Aqualogica, BBlunt, and Stage, while Stage is Honasa's youngest brand, which was launched last year and operates in the color cosmetic space. In financial year 2025, Honasa reported an operating revenue of 2,067 crore, which is up by 8% from the previous year, while its net profit dropped to 73 crore from 111 crore, and that is majorly due to the impact of its offline distribution restructuring exercise. So these were the top 5 business newses from Business Bytes in our channel, The Spotlight, India's first online business news channel. I would like to request you to please subscribe this channel so that you can have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.